Welcome to the MSDW podcast. I'm Jason Gumpert, editor at msdynamicsworld.com. On this episode, I'm speaking with Larry Mellon, Tax Director, Chief Tax Office at Vertex, as he helps us shed light on potential risks that businesses grapple with as a result of relying on native tax functionality in their ERPs rather than a dedicated tax engine. Vertex is the sponsor of this episode, and we ask Larry about specific challenges like tax accuracy, increased audit risk and compliance, as well as some of the opportunities and advantages that result from using a tax engine with your Dynamics ERP. All right. Well, Larry, welcome to the podcast. Could you please tell our listeners a little more about your work at Vertex and your history with tax management?
Sure. Thanks for having me. So I've been involved in tax and transaction tax for 30 plus years now. I've been at Vertex for 18 and a half. 3 of those years have been in our chief tax office. The first 15 was in our finance department, where myself and my team were responsible for doing Vertex's taxes. And then within the last 3 years, working in our chief tax office, just working with understanding, educating both internally and externally about tax knowledge, about how taxation works and some of the pluses and minuses of using technology, as well as being able to work with jurisdictions and customers alike.
All right. Well, I'm really looking forward to getting into a little more about tax management, tax automation here. Can you maybe tell our listeners a little bit more about what a tax engine is and how it differs from native tax functionality that they may be familiar with in an ERP like a Dynamics 365, Business Central, or Finance?
Sure. So often what happens, and not all the time, but often what happens with the native functionality, it's you're basically getting the information that's coming from an ERP system that's giving you reports and documentation to help you prepare to be able to put together a return and remit that return. But, that native functionality of our ERP is not what its main purpose was. It's an ERP for a reason, and it's providing that financial information. What's beneficial about a tax engine is a tax engine works closely with those ERPs and works with, all ERPs, at least ours does, and allows you to be able to work to continue and map and determine what products and services you are providing. The tax engine will help you determine its taxation so that you are aware of the products and services you sell, you've allocated, you've mapped it to a particular category so that the taxation on both sales and purchases for a business is accurately reflected so that when it's reported to a jurisdiction or reported on an invoice back to your customer, it has that accuracy just because it's coming from a tax engine type system.
All right, great. Well, you mentioned accurate taxation. Can we talk about some of the common challenges you see there with the businesses face when it comes to achieving tax accuracy?
Sure. I mean, the key with it, of having this tax engine in place is accurate taxation is one of those. Accurate compliance. We look at the taxation and compliance, and they are clearly different. Some of the compliance pieces are making sure that you've filled out a tax return correctly, all the numbers and tax and documentation that's needed is in the right fields before it's submitted to a taxing jurisdiction. So it's all in line to make sure that you are reducing any potential audit risks that you have. And we're going to talk a little bit later on too, but it's going to help you with, by having this implementation of having this engine in here, potentially gives you the ability to augment some staffing that's needed too. So we're going to talk about that a little later, but they're just some of the key areas.
When it comes to accuracy, why is it crucial for businesses to really pay attention to accurate taxation in terms of, sales and use tax assessment?
So I think the biggest thing to look at is, if you're involved in any type of tax position, is the fact that taxation changes all of the time. It changes either by the rate of something, it changes by the jurisdiction, it changes by particular product or service. You may have a product or service that your business sells, and you may tax it one way if that product's being used in one jurisdiction, state, county, local, or how it's used someplace different. By having this tax engine, all this language and information is in there. You don't have to provide that research yourself. All of that stuff is in there so that you're accurately every month invoicing your customers correctly, making sure invoices from purchases are correctly, and remittance to jurisdictions is accurate.
What else can you tell us about the importance of being able to see how products or services are taxed?
Well, I think the importance of that is, of course, is incorrect taxation. If you are putting out incorrect invoices to a customer with the wrong rate or the taxation of that, the importance is to make sure you get that right. Your business is going to hinge on that, on whether that customer is coming back to you and saying you've provided incorrect information for them. It's really critical on purchases. We've found over past that some vendors are charging the tax rate on where they physically reside versus where the product or services are used. So there's a lot of different taxation. So the importance of having this tax engine is to be able to read the invoices that are going out or coming in to make sure they meet a validation test to make sure that they're accurate.
Got it. Okay. Well, let's dive a little deeper into compliance now. What are some of the common challenges that you see companies facing when it comes to maintaining compliance?
So I think the biggest thing is accuracy. We know that if you're in the tax world, that there's no one tax return that looks the same. A county, a city, a state tax return is different. And getting that accurate, we have seen over time that potentially people who are doing stuff manually or not having a good system in place often are reporting information in the wrong field, which potentially opens you up for audit, opens you to have risk of paying incorrect taxation because of the percentage that's being calculated on there, whether it be manual or automated. So by having a tax engine in place, these challenges that we have is maintain this compliance accuracy and making sure that it's done timely as well.
Can you talk about how reporting to tax jurisdictions works with a tax engine?
Sure. So, like in any situation, whoever is using this software and tax engine is the decision maker at the end on how this gets reported. So ultimately, you're going to have documentation in front of you that show you information that's led from your ERP system and the tax engine that's going to show here are the transactions of data. Here are the gross sales. Here are my taxable, my non-taxable, whatever those transactions may be in tax. Each of those is going to be reported to that taxing jurisdiction. So having the automated information, it's the taxing jurisdictions are used to working with tax engines where they have that stuff that's automatically sent in there. That software is aligned with whatever taxing jurisdiction exists out there, and it will read each of those and it makes sure that it's providing accurate information.
And in your experience, how have taxing jurisdictions adapted to receiving tax data from tax engines?
I think they're really good at that. I think that these jurisdictions are used to having these businesses using these tax engines, and they're very supportive of that. As much as there may be multiple tax engines that are out there that do this, the jurisdictions are used to receiving all that information in. So the more detailed they can be and the sophistication and detail that the tax engine is in reporting, although it may be easier on the employee side to prepare it and put it together, to give as much granular detail that these taxing jurisdictions want. With having these engines in place, it's going to be positive. Many of these jurisdictions certainly know the products that are out there and how they receive them, and it's also going to reduce some risk and exposure as well.
Yeah, and I think you touched on this, but there must be benefits also to this integration for businesses using the tax engine.
There is. By having this integrated, we know that there's, depending on the size of your business, you may have multiple businesses that you're producing things separately. By integrating, putting these together for reporting, depending on the company structure that you have, putting these from multiple engines together and stuff is also beneficial.
I want to go back to something else you also touched on a few minutes ago, and that was audit risk.
Yep.
What reporting documents do tax engines produce, and what are the benefits that they offer for companies and auditors?
Right. So what happens is that these jurisdictions are used to seeing these type of reports. So you're certainly going to have the reporting documents that you're going to use that produce our standard reports. There are some, they have the ability to create reports that you want out of there. You may be working on a project where you want to analyze certain type of data on certain thing that's sold or how it's taxed. These engines will give you the ability to have standardized reporting that's in there to help you look at those things. Where it's specific in audits, you may have an auditor that reaches out and is looking at something and they potentially find something within that system where they differ on how you've made a decision on how you've taxed something. You certainly can go back and run these reports to be able to see what information and how it was reported to them. And this information you're going to look at and be able to analyze this stuff and report back to them. So it also gives a lot of detail to summary, right? Lets you look at it. And plus, when you had also mentioned about the audit side of it, many auditors are used to working with tax engines, so they know the products. As much as you work using a tax engine every day within your business, these auditors are using multiple businesses that are using the same type of software. So as much as you're familiar with it, the auditors are just as familiar with that as well.
All right. I wanted to go back to staff allocation and its impact when you have better tax management. Can you talk about that?
So I think a lot of times when people talk about it, when especially tax leaders are looking at it and have the ability to put a tax engine in place to streamline, reduce the potential for errors and risk that's out there. Often people start thinking about, what's going to happen with the staff. I have a staff of X amount of people, and now if they automate, I'm going to be out of this job or something's going to change. But I think that what often happens is that anyone who's been in some tax type of management role understands that there's many, many jobs that have to be done that often don't get done because you're awfully worried about that monthly compliance. So we also know that part of what you should be doing in tax department is evaluating your risk going forward. You should be making sure whatever tax changes took place, you're able to see that. So by doing reverse audits on how you've mapped products and services that you purchase or sell to see if something has changed. It may be exactly the same, but there may have been changes that took place where you need to go back and change how you've mapped stuff, right? Many projects, you have to go through some of your exemption certificates, right? Analyzing some of this data, reallocating staff around to cross-function people. Some of the areas by bringing on this tax engine and modifying to newer technology doesn't necessarily mean augmentation of tax where it's eliminated, but also gives a chance to reallocate people and make every part of the team touch other parts of the transaction piece.
We also want to let our listeners know how they can learn more about Vertex and what your organization is doing today. Can you tell us more about that?
So Vertex, and Microsoft have partnered, on solutions for quite some time, probably more than 10 years at this time. And, it certainly helps the value of the Microsoft investments, streamlining global tax determination, compliance, all those areas. But if anybody wants to go to our Vertex website at vertexinc.com, can certainly read all about the solutions and offerings that Vertex has for the businesses today.
Well, Larry, thanks so much for being here. Thanks for the update. Really good talking with you.
Great. Thank you so much for having me.
This has been another episode of the MSTW podcast. My thanks once again to Larry Mellon for joining us. To learn more about Vertex's integration with Dynamics 365, please visit vertexinc.com. You can also email them at microsoftdynamics@vertexinc.com to discuss your specific tax needs. Vertex integrates with Dynamics 365 F&O, Business Central, Sales, and Commerce. And that's it for this episode. If you want to get in touch with me, you can send me an email, jason@msdynamicsworld.com. For all of our updates, please do follow us on social media. Until next time, this is MS Dynamics World, signing off.